Welcome back, my passive income investors. I'd like to another exciting video where we're going to break down my entire investment history, where I made money, where I lost money, and all the trades in between, something a lot of investors don't do. So consider slapping a like and subscribing if you're new to the channel, guys. And before we jump into the actual transaction and trade history, we're going to look at my performance chart. As we can see here, guys, very exciting stuff as this breaks down my 5-year dividend investing journey. Well, it wasn't dividends back in the day, but my entire stock market investment journey. So this is super awesome, and let me explain this chart to you so you better understand it. It comes from my investment accounts, so you know it's accurate, guys. And basically it goes back to all the way of September of 2014, and the black line is the most important line because that black dotted line represents the S&P 500, which, if you don't know what that is, it's the 500 largest companies in the US in a big basket, which basically shows you the performance of the entire economy, and it's what every investor pretty much compares themselves to, literally, guys. So as we take a look, if we go all the way back, it wasn't that pretty. At the lowest point of my account, I was down a whopping 41.25%, which we're going to get to see where I made those mistakes very shortly. But at the peak of it all, guys, as it stands right now, my TFSA, which is the blue line, which I only started 2 years ago, which basically are the two accounts. So the orange line is the cash managed account, and the blue line is the tax-free savings account. And as of today, my managed account, the cash orange lined account, is a 44.3% return, and my blue line, my TFSA, my tax-free savings account, as of today has a rate of return of roughly 75.54%. So we are outperforming the index, as the index says it's sitting at what, 51.62%. So no matter what, at least we are outperforming the market quite nicely, and that does not include the dividends, guys. If we included the drips and the cash payouts, man, this would be a lot higher, which is cool. But let's get right into this, guys, jumping into the actual real transaction history from my bank, something that I want to see you guys do. And let me know in the comment section below, maybe link some of your information. I'd love to see what you've done in the past. And this is the most fascinating stock I ever bought. I'm going to show you the first two stocks I ever bought, starting with numero uno. Have you ever heard of a company called Tweed? Well, I purchased this company on August 6th, 2014 for 190 shares at $2.65. Do you know what that is? I'll give you a hint. Weed. Weed. I don't want to say it because I don't want to get dinged from the algorithm here. But basically, this is Canopy Growth Corp. Yes, we all know what happened to that industry. And we're going to see I actually lost money on it in the beginning, but my first ever trade was $528. So if you want to see what you start with, guys, I didn't have a lot of money. I started with $500. This was right after I paid off my $22,000 of debt that I took out when I was 19. So this is like my first steps into investing right here. My second stock I ever bought, Northland Power. Let's take a look at this company. I've held on to this one for eons. So we go NPI. So look at Northland Power, which is one of my favorite companies. I've been holding on to this one for a long time, and the return has been absolutely amazing. And as we can see, if I just put all my money into these two stocks, that Tweed and along with Northland Power, I would have done great, because pretty much all the way back when I was buying it for that $17.80 a share, we can see I've had a rate of return of 46% roughly, give or take, with a 5% dividend yield, paid monthly, by the way, which you'll see in the accounts as well, which would basically leave us over 5 years. Well, that would be what, 25% on the dividend, and then another 45%, giving us what, a 75% rate of return overall. Not bad, might I say. Good investing on me. High five. No one's here to high five me, but I'm high fiving myself. Again, slap a like if you think I deserve a high five for that trade. But not yet. We're still in old times. I lost money. Remember that. I'm going to show you the real ways I lost money investing, guys. Luckily, Northland Power was one that I didn't trade really. I just kept buying it. I bought it $17.90, bought it $18. I bought this one a lot. Started with a dividend yield of $5.40. Let me tell you, 5 years later, it's paying me $50 a month. So that's a big jump from $5. Wow. Crazy how fast things can grow, guys. You just got to be patient, be consistent. Credible stuff. So Canadian oil sands doesn't exist anymore. I bought this one on the amazing Kevin O'Leary's advice. I used to watch Kevin O'Leary go on about how, oh, every Canadian should be invested in the oil sands. But that was before Trudeau was elected and everything went downhill. So, I mean, Canadian oil sands eventually got bought out by Suncor. I was buying this one for a while. I think I held on to it for a year or two and then got rid of it. So let's keep scrolling through here. So this was the first steps all the way up till April. So this is just a few months of me buying stocks, and this is where I don't know why I decided to sell Canopy, but I sold it at a loss. So I sold 90 shares, not all of them apparently, and I sold them for $2.03. So there was my first big loss. Kind of crazy to think that I don't know why I was selling it, but maybe we'll find out more as we continue on here, shall we, guys? So scrolling down here, we're going to get into April, May, so we're getting into the spring and summer of 2015, where I was buying apparently more Canadian oil sands with some more dividend payouts from Northland Power. Here's one, Crescent Point Energy. My mom used to own this one, and we both sold it at a loss, and I'm going to show you why, and thank God we sold it. I'm sure we'll see the sell price at some point along the way, but if we go CPG stock, CPG, Crescent Point Energy, over the 5 years, guys, this stock has done very, very poorly. It's still paying out a fat dividend. This is an oil company, energy company. Stay away from energy companies, man. Have they done poorly? So I'm glad I have no exposure to oil anymore. It's not really my thing, but that's why I like Northland Power. In my early days of investing, I don't know why I was so drawn to the utility sector. It's like the basic place that I started because I just felt it was the most reliable place to get high yielding dividend stocks. Turns out that's not always the case. So Manulife, an insurance company. This one I was buying for $23.38 a share. If you guys don't know what Manulife is, I think it's a Canadian. Is it a Canadian? I think it's a Canadian insurance company. Not a big fan of it. I sold it later on. This is so long ago, man. This history is like tapping into a time capsule or something here. Just tapping right into it. So we're seeing this one had a 4.3% return. I would have had a little bit, been up a little bit on the equity value, but we can see over 5 years, guys, it hasn't done anything. It really hasn't done much. You would have been better off swing trading this. When it drops below those big dip marks, you could pick it up, maybe get a good deal on it. But let's take a look and keep moving forward here. We'll probably see me be in and out of that one a couple times. So we got some dividend payments coming in here from CPG when I was still owning it, Northland Power continuations, some Canadian oil sands stock dividends. So let's keep moving on. This was actually before I was even day trading. We're going to get to see where I started day trading as time goes on here. So it looks like I got some more dividend payments. Northland Power, MFC started paying some dividends. Oh, introduction, guys, to the banks. My first bank I ever bought, Bank of Nova Scotia. So I made some good money on Bank of Nova Scotia over time. I started buying my first 9 shares for $545 at $57.83 a share. Needless to say, we're up quite a little bit from that, but not a lot of shares. I own a lot more today, but not a lot of shares. So is there anything new here? Dollarama. Dollarama was one that I wish I hold on to. It ended up doubling its stock price in 2015. So if we go all the way back, guys, well, if we held on to this from 2015, our rate of return would have been, excuse me, 162%. My goodness. So moving on. Oh, an introduction to Hydro One. Hydro One has a funny story behind it. I wish I held on to it because the company eventually did a big dip and came back. This is an Ontario government-owned company. I hate it for that reason. I sold it for that reason because the government screwed up billing, ended up charging people like us way too much, and after a lot of people complained, they gave like a complete rebate to every single customer. So we can see now as we get more into the ending of the first year of investing, we started putting away bigger chunks of change. So we can see we started doing $1,000 buys on Hydro One. Bank of Nova Scotia, what do we get here? We got a little bit of another buy for 11 shares at $57, so not doing bad on that. So this is where things get a little bit more interesting, guys, because this is where we started buying apparently some more CGC. So when that merger changeover, when they swapped names, we can see that I was apparently buying 90 shares at $2.61. Ooh, what a day, man. What a day to be buying Canopy Growth Corp. Oh, BTO. So here's a gold stock. I was trading back in, I've never lost money trading this, and we go all the way back to October 4th of 2016. So I like the gold stocks because they're a little bit more volatile, but they're not really going anywhere. And you can kind of play them in between earnings because there's so much volatility. Like look at the last year of BTO. It goes all the way up from highs, and it'll drop 20% with highs going all the way up to 50%. And it does little staggered jumps constantly. So even here we can see it goes all the way up 8 to 10% in just a few months. So when I was back in swing trading days, and I still consider swing trading a lot, but fascinating companies to trade, guys, gold companies. Find those big market gold companies. This market cap is $4.6 billion, and you can try and play the trends. They don't move very fast, mind you, because even if we look at 6 months, we can see over half a year. Is that going to load for us? Yeah, so over half a year here, guys, we can see these little bumps are the ones you probably want to play. Try and catch one of these bottoms and take a 10, 15% spike and just play those little trends, man, those little trends. So yeah. Moving on though, guys. So there's another interesting trade. We're getting more into the more recent 2016. So we're about a year and a half ahead of ourselves now. And if we go back to a year and a half of our history here, so now that we're into 2016, so this is where we started making trades and buying companies that were actually making us money. So back here, we were really losing that money through all of 2015. Those stocks were doing real bad. Canopy Growth Corp was down. Things just weren't good. Mind you, I wasn't selling, so this is like more representative of paper loss at the time. But let's keep going. So if we come down here, where are we? Of Canopy Growth Corp. Buying more shares, another 56 at 670. Just kept buying them, man. Now, well, it was good. High five again to myself. I mean, just really loading up here. Another 58 shares at $7.20. Where did I start selling? That'll be fun to see. It'll be fun to see where I sold CGC off at. Because these are early days for Canopy Growth Corp, guys. Early days. More BTO. So this is where I sold BTO at a profit. We'll probably see some of those in and out of here. So BTI, I buy more. I kept buying and selling this, clearly about 4,000 or 5,000, making a few $100 here and there. Nothing crazy. I had a really good time with BTO. Take a deep breath, because this is where things get wild. This is where I started my day trading in endeavors, I'm going to say. Starting with DCIX. I bought 175. Well, I sold 175. Oh yeah, so we're going back in time. So pay attention to this, because we're moving backwards. We're going to see the history as it kind of excels forward here. So pay attention. So we're taking a look at, I sold DCIX for $11.34 a share. I sold $2,500 worth was the end goal that I got out of this, the end cap amount of cash, that cash. So now we're going to move down the line slightly here just to take a look. So we're going to go one more previous. This is where we should see the buy orders for DCIX. So here I was buying it for $8.45. So we made about a $500 profit on that one, guys. But this was the first trade ever where if I went to the bathroom, I would have lost a crap ton of money. Because if we take a look at DCIX today, DCIX is not doing that well. It's trading for $1, guys. So this is one of those penny stocks where if I was just trading it, but the volatility is wild, man. It's one of those day trading stocks. Stay away from it. Not reliable. But I want to show you some of the companies that maybe we could have made a lot more money on. Because interesting, guys. So let's take a deep look on some of my more intense trades. So what is YGR? So Jaggers Limited YGR. I don't know what that is either. This is when I would literally go on basically like any kind of stock tracker, and I would see like the best performing stocks of the day and try and play the volatility in the mornings, which was really dumb because I didn't know the company as I was trading. So here's one that's been really volatile, down to $1.16, in which I was trading it for NOG. Is it the same? No, we're on YGR. YGR I was trading it for $1.45. Took it at a loss, apparently. Sold it for a pretty big chunk loss. Lost $300 on that one. And today it's trading at $1.16. So, I mean, it's not that big of a deal. Could have lost a lot more, man. Could have lost a lot more. That I utterly regret, guys. Here's another important one. LAC. Lithium Corp. Let me show you what this company is doing today. This is the equivalent of Tesla if you were buying it back in the day. But let's take a look here real quick, guys. Let's take a look. As we can see today, lithium is worth $4.04 a share. Oh, man, this one was painful. This one's painful. Yeah, this company at 80 cents. 80 cents. Ooh, 400% return, guys. I just held on to that sucker. But like I said, we're going to see some other ones where I lost money here with DRYS. So Dries, I lost money trading. Another shipping industry. Genie, another one. Well, did I make money on this one? It looks like we bought it for $3,043, sold it for $3,346. Genetic Technologies. Does that one still exist? So here's a trade where we actually made money. Let's take a look. Yeah, let's take a look. What is Genie stock? What is the Genie stock? Okay, glad we don't even hold that anymore. So let's get out of that. That would have been a huge loss. Holy cranoodles here. Gee beliebus. Ugh, that's scary. That's scary, man. That's a big drop, man, on Genie. I was trading in the $2 range. Thank God I didn't mess around with that one for too long. Tokyo Pharmaceuticals. I don't even want to look into that one, but clearly we took a big loss on that for about $400. $400 loss. So here's where we first started selling in Canopy Growth Corp. So I was holding on to those shares for a while. We sold out, made some profit at $9.52. This is when it did its first run up to $12. And then I ended up buying back into it when it dipped, which we're going to probably see in here. But I think I did a lot of that in my tax-free savings account, which we'll get to in a second. So what else happened in here? So here we bought, sold some more BTO, took some more profit, I hope, on that one. Now that it was trading at $3.50. So that went on one heck of a run. So we're getting more up to date here, guys. Much more up to date. So let's keep going. What else we got? Scrolling down. All right. So let's get through this for you. So we all know Financial Education. Do you know Financial Education channel? Big guy. I remember back in the day, if you're in the OG days of the YouTube investment community, you'll remember GoPro. Go Broke, as it was called. GoPro. I was probably one of the few people that made money on this. I bought it and sold it and actually made about $500 on that trade. Really awesome. Couldn't really complain about that. which we'll probably see in somewhere in the history. Was the buy in here somewhere? I think we might have passed the buy. Either way, fascinating stuff on that one, guys. So I used to trade GoPro. Bombardier is one that I'm glad I'm not a hold of anymore. That one did not do well. Canadian Imperial Bank. So this is when I've been starting to buy shares of companies that I've been holding on to forever. This is when my investment philosophy, after I went through my day trading phase, I started realizing I just wanted to hold companies long term. That is like the true heart of investing for passive income, guys. The last company we can see that I was really flip-flopping on, we have Cardinal Energy. Oh, that's another energy company. I met a guy that was buying it. I decided to buy some, sold out of it. Thank God I did, because it did not do well either. So we don't even want to talk about those energy companies anymore. So let's just move into the last couple years, because we're 2017. Now we're getting into 2018, much more recent. So let's see if we can just figure out the last few trades. This is where I was buying Apple, and another painful trade, guys. Shopify. Shopify was a company, obviously, I wish I held on to. I was trading for $223. As we all know, it trades over $3, hit like almost a high of $400. Just started buying Philip Morris back here, Constellation Brands. So these are all more recent trades within the account that don't get really represented, because this is when I started switching over to my tax-free savings account, and everything in my tax-free savings account are pretty much all the same companies I've held. The only company that's not in there is Constellation Brands. I think I sold one other one, which was Brookfield Real Estate Services, another company that was terrible. Held onto it for a little while. Excuse me, took a bit of a loss on it. Doesn't matter though, because these are the main companies that I hold, and I'm glad that I'm able to show you guys and give you a deep history into my personal investing career. And I have been able to outperform the markets. You should be able to do this as well, guys. Remember, I'm not a financial advisor, so I hope you enjoy this as like entertainment. I've been slaving away to make content like this to help you guys better understand what you're doing, so you don't have to pay some crazy financial advisor a whole lot of money sitting behind the desk. I'm doing this from home, so can you guys. Let me know what you think in the comments section below. Bit of a different video for you on a Saturday, so we're working on a ton of side projects. I can't wait to share with you guys, so I hope you'll stick around for my personal investment journey. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.